Good evening, guys. Today is Thursday, October 26th. Hope everybody's doing well. Had another distribution today on the NASDAQ, Dow, and the S&P 500. As you can see, the NASDAQ was down 225 points today, 1.76%, way below the 200-day moving average. Obviously, as this is a daily chart, just to give you context. And so I don't expect anything changing until at least it beats the 12,300 mark, 12,200 mark in terms of a reversal. It could reverse over here, but I suspect it's going to get down to this mark anyway. The next big stop seems to be somewhere in this range where the previous support seems to be over here. The resistance now becomes a support, and that should be in the 12,200 mark, 12,300 mark. Until then, it's going to be tough going, is my sense. But I'm staying out of the market right now, looking for a good place. S&P 500 also broke through the channel. That's not a good sign. Way down below the 200-day moving average and heading now closer to the 4105 zone, 4137. So about another 22 points down is what I expect, at least the minimum for us to see a reversal. And if I had to adjust it down, technically you could see it go all the way up to 4049, which I doubt. I'm hoping it reverses somewhere in this range, which is the 4,100 range, but let's wait for it as it comes up. The Dow Jones Industrial Average also down roughly about 250 points, 0.76%, breaking all kinds of new norms. So this is a difficult place to be right now. It's probably going to head to the 32,420 zone is my thinking currently. That's my current expectation, but let's see how it goes. One of the stocks that showed up on my radar is Mobile Eye Global. This is a company that provides infrastructure tools and also provides electronic car or EVs and also other cars, the ability to be able to do auto self-driving. So they provide LiDAR technology. They provide a lot of different. This was a spin-off from Intel, I think. And they make advanced driver assistance systems, as you can see. The company is roughly about $20–30 billion in market cap. Let's look at our five-step process, see where we end up. They had earnings, and a very good earnings at that today, which is why the stock went up fairly well. Looking at the quarterly and the annual statements, let's look at the annual first. Roughly about $900 million, $879 million in 2019. Double that, easily double that in 4 years to 1.89 billion, roughly about 30% growth, 35% growth last year. This year looks to be in that range as well. Decent margins, still in the 50% range of margins, and then net margins, they're actually lost money. So they're losing less money on a pre-tax basis, not profitable yet. Let's go to the quarterly, roughly about 450 million on a quarterly basis, losing about 18 million. So they're still losing money. They had one quarter where they made money in Q4, December 2022, sorry. So I'm hoping that they turn that around. Still losing money, but 50% gross margin seems okay. A little more than 50%, but it seems okay, somewhere in the 50% range. Balance sheet, total assets about 15 billion. They've got a lot of debt. They don't have a lot of debt, sorry. They have about 40 million. This is what I was missing. So not a lot of debt. Looks nice. Looks like a good, clean balance sheet. The fact that they don't make money is a little bit worrisome, but not too much. Let's look at the valuation numbers. Obviously, they don't have any earnings, so there's no PE. For a company that's been growing, if you remember, on an annualized basis, they were growing at about 30%, but on a quarterly basis, they're growing much, much lower. This seems almost flat compared to last year. So they're not growing too fast. Their growth has slowed down dramatically. So the reason why they may be doing well today as a stock is primarily because of the fact that their earnings may have been reignited. But price to sales ratio of 14 is very high. It's really high, even for a company doing about 45–50% gross margins, negative 6% net margins. Very high. So I'm not very particularly convinced that this is going to grow to the moon, if you will. But let's keep going through this list of steps and see where it goes. I'm going to remove all my previous drawings on this just to make sure that we are. So where is that? Stage 2 incline. We did very, very well post IPO. IPO in October 22. Since then, it's been a strong stage 2 growth. Had some consolidation and then did a little bit of a decline. Not too much, so that's not bad. And then now it's been chopping back and forth in a big range between the 34 range and the 42 range. So it's been going back and forth. I don't think there's a clear direction yet. I'm not convinced that this is trending upward or trending downward. So on the very long-term monthly chart, it's mostly ranging or trading sideways. So that's what you got to remember. It's still moving sideways. I'm going to put a resistance there in the 42 zone, support hopefully in the 35 zone, and let's keep going. It could go a little bit lower in terms of support. This could be the previous support that it actually moved in. It's the 33 zone. So let's keep going down from there. So what we know from the very long-term chart is it's still in the ranging zone. This is a stock that is trading sideways. It's moving sideways. It's not really ranging up, ranging down. Okay, on the weekly chart, not exactly a very good pattern, but seems like it had a high, and then it actually has a head and shoulders pattern that actually came out before. On the recent one, this is just a straight up and a straight down. So this month, which is October, has been brutal for the stock before the earnings. So it seems like after earnings, it's at least trying to make a move back up. Don't see any major patterns yet for it. But if you look at the stock, where it should be heading, it's probably trying to form itself a very good base and then move from there. So this doesn't seem like necessarily something that move very quickly, but not too much to follow on the weekly chart. On the daily chart, yeah, so on the daily chart, you can probably see a little bit better. Formed a little bit of a base over here, a couple of touches in the 33, even a little bit more than that, maybe even the 33.28 zone, but not a very strong candle after earnings today as well. If you look at what they said was, okay, so they expected EPS of 17, they reported 22. That's good. They expected revenue of about 527, they reported 530, which is also not bad. So they're growing a little bit compared to what they did before, which is a good sign. That's probably the reason why it even started to move up, but it's not a very strong candle on the daily. So I'm not expecting this to go all the way up back again to the 42 time zone, given how bad the market is overall. And it's a little bit of a wedge pattern. I would hope for it to be able to do a little bit better, but not too clear that that's going to happen anytime soon. So I'm still going to be waiting and watching. Overall, I'm not sure I like it too much. This you could probably avoid. Not a good stock for you to be able to get into right now. Doesn't give me any warm and fuzzies that this is definitely trending up or trending down. It's still in a zone within the 42 zone and the 33 zone. Maybe you could tighten it up a little bit for sure. You could make it go to the 42. But if I had to trade this, if I was really put no other choice but to trade it, I'd probably watch for the stock to somewhere middle around the 36. If it gets closer to the 33, even in the 34 range, if you look at it, there's been a bunch of bounces over here on the 34 zone. A couple of touches, quite a few touches here, a little bit of a touch over here. So this is still in not exactly the zone that I think is comfortable for me to get bullish on. It's not an area to get comfortable, get bearish on either. So my suggestion, stay away from the stock. Watch it though. It's worthwhile watching given that it's trying to do a little bit better. But thank you very much for watching. Please subscribe to the channel. Appreciate your